All right, hello folks. Welcome to Pro Trader Strategies. We're an educational company where we're here to teach you guys how to implement options into your portfolio using some directional analysis that we're going to learn about in these daily market commentaries. So if you're new to this, please smash that like button. Also, if you go over there to the subscribe button, click on that, you'll get notifications for the daily market commentaries and the webinars I do on Thursdays right after the close. Also, if you have any questions, comments, or anything else during this webinar or around the corner when I'm done with it, I'll circle back around and make sure you guys are clear of concept. So please feel free to add anything over there in the comment section. And in this video, we're going to talk about the economic data, the geopolitical environments, how that all impacts the markets with some of my market analysis. And without further ado, I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media. So let's talk about the economic data. Across the pond, today we were talking about it all week. This is what we've been looking for, the PMI numbers. Anything above 50 is expansion, and I'll let the cat out of the bag. Everything was above 50, so that's a great thing to see. That means there's expansion in the economy. PMI is a purchasing manager's index. He is the person that is looking out in time, seeing the demand come in for their products or their services and ramping up production for that demand. So what they're doing is it's forward looking. That's why I like to look at this number more so than anything else. It is not hindsight. It's not something that's already been. It's projection going forward. So French and Germany are the major manufacturing sectors of the European region. So French manufacturing PMI coming in at 58.6, but slightly lower than the 59 expected. And services PMI for France coming in at 57.4, expected to be 59.6. That was correct. So slightly lower than expected, but again, we're looking for numbers coming in above 50. The manufacturing sector for Germany coming in at 64.9, expected to be 63.3. The service sector for PMI out of out of Germany coming in at 58.1, expected to be 55.8. So both German services and manufacturing beating on the headline numbers. And then the broader European region, we got the manufacturing coming in line with expectations at 58, and the manufacturing PMI coming in at 64.2, in line with expectations there. The Great Britain flash services PMI in line again with the services and the manufacturing, both pretty close to being in line with expectations there. Now, moving over here to the United States, we got our own market flash estimates here, and we really look for the ISM, which is the Institute for Supply Management Economic Data Points, which will probably be coming out next week. These are a little bit precursor to that. Gives us a little bit of a heads up. I'm going to look for those numbers really to trump these numbers. All right, so manufacturing out of the U.S. coming in at 62.6, higher than the expected 61.5, and services PMI 64, really missing 64.8, expected to be 70.7. Last month's number again 70. So coming off a little bit on the service sector. We are a service sector economy, so that's something we are going to want to keep an eye on. And then finally, we've got crude oil inventories, a drawdown of 7.6 million barrels, expected to be a drawdown of only 3.6 million barrels. So 2 months in a row where we've seen this number really come out much larger of a drawdown than what we were expecting. All right, so giving a little bit of a boost here to crude oil. Is that 100 around the corner? Well, it looks like we're definitely going to be testing the 80 handle, or at least 77 pretty soon. Now, today we're going to keep an eye on these markets because a lot of markets are looking a little toppy right now. Now, I talked about yesterday, risk was to the upside. That's where we found that risk was to the upside. Today, it feels more like a sit on your hands type of day, folks. Why? Because of this consolidation, and we are at all-time highs for a lot of stocks and indices. So today, I think, is a day to let things start to work out, and for the rest of the week, we're going to see how this all plays. So crude oil moving higher today, but again, making a little bit of a toppy pattern there in crude oil. Bonds, it's pretty messy. Right here in and around this 160 handle is the sweet spot for bonds right now. A lot of things going back and forth. Ballard, who's not a voting member, talking pretty hawkish. Some of the other governors talking a little bit more about transitory inflation. So all of these Fed governors are really kind of butting heads right now with their own thesis on how inflation is going to react in the economy. Is it going to be a shorter term rise in inflation and then start seeing some of these commodities come back off again? We're starting to see some of these commodities already come off a little bit, not necessarily just in gold futures that we've seen in the last week or so really have a sell-off, but we saw lumber and we saw some of the other metals like copper really coming off as well. So these commodities not staying at those elevated levels, part due to the fact that we were seeing strength in the dollar during that time as well. Now, Bitcoin, after breaking out of the 30,000 handle, is back up into that area right now. It looks like we're migrating back towards 37,000. Are there weak hands starting to shudder here in and around this area? When we started breaking down below 30,000, we started seeing a lot of people start to press the panic button, getting a bit of a bounce today with Bitcoin, as a lot of some of the weaker hands probably got shaken out of that type of trade and are starting to see that revergence of people coming back into the market. VIX in the teens, but with the equities really feeling unchanged for the most part. But when you pair that with the way that we're looking at these chart setups, it is looking pretty darn bearish, to be honest. We've been talking to the upside yesterday. Today, I would say the risk is to the downside in the Dow Jones Industrial Average. We got that, I mean, how you kind of write it up. You get a green candle moving higher, and then basically your hangman doji at the top of that move. That looks like markets want to start rolling over. Definitely if we get a candle that gets that's your confirmation that you're looking for in equities. Now, not quite there yet inside day right now from yesterday, but a settlement below yesterday's low would be a confirmation. Yesterday's low being, right in and below. So let's call it the low yesterday is 33,627. So something just below that or at that mark would look like we are confirming that rollover. NASDAQ, they're the ones that are kind of leading this charge the last couple of days to the upside with the tech sector really doing well. But there's some tech stocks that are starting to make all-time highs and creating those spinning top dojis or a hangman doji at the top of a major move. That is something we are going to be hyper-focused on keeping our eyes on, especially if those big names like Microsoft, Facebook start rolling over. We could see the broader sector start to roll over as well. E-mini S&Ps unchanged. Let's take a look at the breakdown of the E-mini S&Ps. We can't call it an inside day. It is above yesterday's value area, but just so quiet that the market really struggling to get a directional move. I would say risk across the board in equities is to the downside today. It just feels very heavy. We'll take a look at a couple of stocks that we're taking a look at, Kroger being one of them, but a couple of them that I was talking about, all-time highs. Facebook, look at this chart setup. Boom, at the top of that move, we have a basically a spinning top doji right here. So something we're going to be keeping an eye on. Confirmation tomorrow to the downside would start to make that look like a very nice topping pattern. So Facebook, we can take a look at. Microsoft is a little bit messier of a setup there, but at the end of the day, we're getting a bit of a, Microsoft, a bit of a topping pattern here, as you can see. Not quite a hangman or anything else. So sometimes what we can see with this type of setup is that could end up being a continuation pattern right there. So not a perfect setup. A settlement near the highs of the day would actually make this chart look better than a settlement near the lows of the day in my eyes. But that part of this tech sector making some topping patterns there. A couple of other ones that I was looking at. Costco, another really good one, not tech, but making a topping pattern here at the highs of this move that we've seen. Now earlier that pattern was looking a little bit better. A finish near the high on Costco, even strength into the close, would make this probably look more like a topping pattern as well. finish near the bottom of the day, it's not necessarily going to do that. It's going to make it look more like profit taking on just the candles. So a settlement above yesterday's high is probably something what we would be looking for to make that really look like a pretty top setup. All right. So those are the ones I'm looking at: Microsoft, Facebook, Costco, and things that I'm looking to add was Coca-Cola here. So with Coca-Cola, I decided to take advantage of the high implied volatility at the time that I put this trade on and went in and sold the July 53.5 puts in there for 43 cents. Well, I was on near the highs of the day. We had volatility really jacking up. Now the market started to sell off a little bit, and I'm getting that volatility coming out. That's not helping me out with this strategy whatsoever. The volatility coming out is helping out a little bit, but the directional move is pretty much keeping this trade as a scratch at this point in time. I'm right there at 43 cents for this trade. So looking to get out of DraftKings as well, very close to getting out of this trade. If you guys remember, I have on the July 40 puts in there. I'm trying to get out right now for 19 cents. Looks like they're trading 20 mid-market right now, so I'm on the bid in this. I originally sold it for $1.20, so trying to take $1 out of this. I haven't gotten clipped on those. Probably get clipped right after the close or right after I get done with doing this video, but about a penny or two away. So I want to make sure you guys are on that with me trying to cover it. And I'm also trying to get out of my Toyota working order here, working it for 10 cents. It's trading around 34. If you guys remember, I sold the July 195 calls in there for sold the 195 calls in Toyota to collect, I think it was right around $1.20 also, off the top of my $1.40. I'm trying to get out right now for, what did I have that working for? 20 cents. Trading 32. So trying to get out of DraftKings, Toyota, those are the ones that are the closest that I have working orders, and added Coca-Cola to my portfolio. And that's all I got for you guys. I forgot to add, you guys, I forgot to add, nobody was over there in the comments section. Hey, show me the share. The share. All right, so let's look at Toyota Motors. Toyota Motors played this, shorted the 195 calls, which puts me above the high here by about $10. Looking, even though the market's moving in the direction against me, moving positively, I have short calls, which is a bearish position. This volatility and theta coming out of this trade is really helping me out here. And the reason why I added Coca-Cola, we'll take a look at that because the chart wasn't being shown. Coca-Cola was making a nice move today, looking like we had created a little bit of a bottom here. I thought we were going to get above the 50-day simple moving average, but the market has started to self-correct throughout the day as we're seeing a lot of these equities start to come off a little bit here, and that's why I sold those July 53.5 puts in Coca-Cola. That puts me below that 78 Fibonacci here, and with the collection of credit, that puts my break even right around $53.10. So I'm below that line in the sand there, which is what we're trying to do to set these up. I've got a nice little support level there for that swing trade. All right, that's all I've got for you guys today. I'm going to try and remember to start adding that screen share on there. I'm not used to it. For 4 years of doing it where it was automatically done for me. Please bear with me. We will shake out all of these details on these daily market commentaries for you folks. So that's all I got for you guys. Other than please hit that subscribe button so that you guys get notifications when we're doing these videos for my daily market commentaries and the webinars. Comment over there in this comment section. Love to hear from you folks. What do you guys want to look at? What is your favorite type of setup you look for when doing a swing trade? Do you look for a certain candlestick setup? I'd love to hear from you, and we'll talk about it maybe in the next webinar or daily market commentaries when we're talking about swing trades. All right? That's all I got for you folks. Smash that or take that. Bye for now, and take it easy.